Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and finance. This week, China's credit crunch. The People's Bank of China tries tough love with its banking sector. So, does China have a debt problem? And if it roiled the markets, could growth be the next victim? Also this week, the heart of Brazil's protests, the lack of infrastructure. We follow one man on his commute to work, a journey for some that can take up to 7 hours a day. And the other $3 billion, a Google-backed project to get super-fast internet access to the world's poorest. We asked the man in charge if the providers, though, will pass on the benefits. Hello everyone. Back during the financial crisis, the world looked to China to stabilise the global economy, which it duly did with a massive $586 billion stimulus program. Now, much of that went to local authorities for things like infrastructure programs, but another huge chunk went to the banks, leading to a credit explosion. So it came as a bit of a shock to the banking system, not to mention the markets and the investors, when China appeared to be facing its own Lehman's moment. The credit markets almost froze as the People's Bank of China set out to very publicly tame the banking sector to avoid its own North Atlantic-style financial crisis. Particularly in the firing line, the shadow banks, things like leasing firms, pawnbrokers, underground banks, which according to JP Chase lent $5.8 trillion between 2010 and 2012, about 70% of the country's GDP. Also the so-called investment trusts, they have $1.4 trillion under management. Now, you may not think this is all a huge problem given China has $3.4 trillion in foreign reserves tucked away. But it can't use that money to fix banking problems because that would involve selling foreign currencies and buying up the yuan, its own currency. That is not good for exports. In the end, the People's Bank of China is determined to promote less speculation in things like property and stocks. So it's quality of growth, not quantity, that the new Chinese leadership is after. And quality it'll have to be, given the possibility of China missing its own growth target for the first time since the Asian financial crisis of the late 1990s. This all needs a bit of explaining and analysis, and Marshall Mays is with us from Hong Kong to do that. He's a director at Emerging Alpha Advisors, and maybe, Marshall, just give us your assessment on how all of this went down, you know, the way the markets froze and the way that they were effectively allowed to freeze by the central bank.
Well, this is what we might call an experiment, but it was also part of the new administration trying to exert its influence, its reform ideas and its plans for the future. One of the problems, you know, is there's been an excess amount of unregulated financing vehicles in the market in the last 4 or 5 years, which have caused a little bit of a havoc. Traditionally, the system works from the banking system being this major supplier of funds, but that's now only about half the major supply, and much of that money flows through the banking system, but it's still not easily to control. The second problem related to this, which is a lot of corruption, which is standing from a long period before, and the government has been trying to squeeze both of them out of the system, unregulated financial channels and corruption. The approach of trying to squeeze off finance, basically raise the cost of funding, was part of a general program to make it more difficult for illegal operators to work. That happened to backfire, and that's one of the reasons why they've reversed the programs. The second idea was to make it expensive for weak credits, weak borrowers to get funds, and therefore raising the rates made it more attractive to them to actually enter the market. That may be working well, but the major reversal is that they've decided that it's not useful to the economy as a whole, and it doesn't help the financial controls to have interest rates run up so high so fast.
Okay, can you go back, Marshall, to the first point you made, the one about the unregulated services? One term used is the shadow banking sector. What is it that is, you know, attractive about that sector? What are they offering that the traditional banks don't?
Well, the banks are heavily regulated instruments, like in most countries. They're more so in China. The specific deposit ceilings and floors at which you can expect interest rates if you're an individual or corporation, and also lending ceilings and floors. So essentially the profit margins are fixed in for the banks, short of their non-performing loans. The banks were getting more and more involved in selling not only mutual funds and investment trusts, as insurance companies do, but selling other trusts, and more of them became property speculation trusts. So as the property demand began to be more obvious, speculation built up more and more, as developers began to push on projects that were based on local government needs, not necessarily consumer needs, many of the abuses of a system that gets a little bit overpriced, you began to see them financing themselves no longer through banks, which didn't feel comfortable with the risk, but through these trusts. And they were promising returns of 5, 10, 20% returns. In certain cases, 2 years ago, 35% returns. Unbelievable. And of course, they didn't all come true. But it certainly sucked a lot of money out of the banking system. There have been several months in the last 2 years in which net deposits shrank in the banking system rather than grew.
Okay, then let's return to the central bank, the People's Bank of China, as it is called there. It shocked the markets with this experiment, as you termed it in your first answer. How far, though, do you think it would allow things to go? Do you think it would go so far as to allow the banks to go to the wall, send out a really big warning?
Well, the big 4 or 5 banks, the SOBs as we call them, are not going to go to the wall. They are important state institutions as well as listed vehicles in the Hong Kong Stock Exchange. But there are a whole plethora of city banks, the smaller, there are roughly 48 that are really large, and another 200 that are really small banks. And they're continually growing by absorbing credit unions. These are quite commercial. They're fighting for local territory. They have limited influence on them from the central regulatory authorities. They're supposed to report to them, but they're basically the creatures of the local politicians. And they're the ones that have gotten in the most trouble. And likewise, they've been extending loans at cheap rates. All of a sudden, the interest rates go up. They can't finance themselves anymore. The problem now is that if rates got too high too fast, many of these banks could, in fact, as you say, go to the wall. It's not like it would be the whole system, but there were certain ones who did. And of course, the sector where the foreign investors were able to get in were the private capitalized banks and the medium size, below the SOBs, but above the city banks. Some of them have been quite stretched by this environment as well, which is what alarms a lot of these big banks. But to be honest, most of the money going into China in the last year or so has been on trying to find ways to short these government-related banks that were privately operated because they were particularly concerned about these risks. So in a sense, some hedge funds have made good money in the last month.
Okay, final quick thought from you then, Marshall, on the end game in all of this, and that is China's growth. Excuse me, 7.5% is the growth target. Do you think things like this and, you know, the general slowdown that we see in the Chinese economy might mean that that target might not actually be hit?
I think this is not a big factor on that target itself. The larger factor is the shift of consumption in a market that was based on export growth that hasn't been seeing that higher growth rate because of the OECD countries are not growing, to one of domestic growth, which is still not strong because people are worried about pension funds, savings, their money system, things of that sort. The plan is to help it show that there is a difference in risk. If you invest in risky vehicles, you can expect higher returns short of default, but if you invest in safe vehicles, you get low returns. This is something that's quite new to the Chinese market system. Certainly the official deposit system doesn't offer this. And while the sophisticated investors may know this, the average run-mean do not. So in a sense, they are moving slowly toward a system in which there's a difference between risky and non-risky ventures rather than the promise of wild speculation that no one can touch but the insiders, or safe deposits which give you nothing in return for the average person.
All right, Marshall Mays in Hong Kong. Thank you very much indeed for that. And let's stay with China for a moment and look at Beijing's desire to use its currency, the yuan, in global trade and finance. In other words, challenging the dominance of the dollar and the euro. Now, it's not willing to let the currency free float just yet, but it has been signing up countries to use the yuan for trade. Stephen Cole sat down with HSBC's Middle East economist Simon Williams to discuss the rising use of the yuan in global trade.
You've estimated that the yuan will be the third largest currency by 2015. Why the surge in popularity?
I think it's a long-term story. The growth of the Chinese economy is hardly a new trend. This has been the case for many years. You look at the contribution that China makes to global GDP, to global trade, to global FDI. I think when you have that kind of shift in the structure of the global economy, it's inevitable that the structure of the world's currency markets will change along with it, and that the renminbi will become an increasingly significant part of that global currency mix.
There's been pressure for the RMB to rise for years. Why the surge in popularity?
I think what you've had is a series of phases that the reform of the renminbi has gone through. There's been the change in the value of the renminbi. You're now seeing the liberalisation and internationalisation of the renminbi as well. Obviously, this is something which policymakers in the West have been keen to see achieve, but it's also an agenda which the Chinese authorities have taken on as well. This is part of China taking its proper role in the global economy.
Are Chinese exporters likely to build in discounts to compensate for the variations of the currency exchanges?
We expect to see a growing proportion of trade with China to be priced in renminbi directly rather than through the dollar. And there are obvious cost advantages to that kind of direct exchange that will go perhaps to both to Chinese exporters and to those importing from there as well. This is just normal. At the moment, it seems exotic to be thinking about trading in renminbi. 3 and 5 years from now, it will be very, very normal.
How much of a boost do you see for global trade from the increased use of the RMB for trade?
I don't think it necessarily leads to very sharp rises in trade. I do think it reduces some of the costs of trade, and it's just a normal, natural part of the evolution of the Chinese economy. You look at its contribution to global growth, to global trade and to global FDI, it is natural and normal. A growing proportion of that is priced in renminbi rather than in third-party currencies.
Do you see the rise of China's currency, the strengthening of China's currency, and the rise of the Chinese economy being sustainable in the short term anyway? Because it's faltering slightly at the moment, isn't it?
No, this is a long-term story. This isn't a short-term cyclical story. This is the driving force for the global economy for many, many years to come. The rhythm of global economic growth used to be set by the major economies of the West. We think that phase is passing, and instead it's China and the emerging market economies of Asia that will set the rhythm, set the pace for global economic expansion, not just for the next few years, but for decades to come.
There's a growing interest in setting up yuan clearing banks in financial centres around the world. Do you see that developing?
It already is.
Developing fast?
It already is developing, I think, very quickly. Those markets that have been set up for those offshore renminbi markets have gained in scope and in volume at remarkable speed. This is, I say, a natural evolution of global financial markets to match those changes in the global economy that have already taken place.
At some speed, you detect that it's a fast movement, is it?
And the data certainly suggests that, yes.
Geographically, who stands to benefit most from the internationalization of the Chinese currency?
Obviously, the more you trade with China, the more you're likely to benefit. In our part of the world, here in the Middle East, there's certainly enormous interest in using the renminbi more regularly. Obviously, we have dollar-pegged currency regimes across the GCC, but increasingly there are a growing number of our major corporates looking to use the renminbi directly.
And what does all of this mean for the value of the dollar?
I think over the near term, we expect to see no change in the role the dollar has in the global economy of the foreseeable future. The dollar remains the reserve currency of the world, but as the global economy continues to change and global currency markets adjust to the change in the structure of the global economy, we would expect to see the renminbi having an increasingly central role in the way in which global financial markets, global commodities are priced.
Now to Brazil, and just a little insight into a nation that became synonymous with the rise of the Southern Hemisphere. But has it misused that windfall of the last decade? Ask the man or woman on the street who's protesting right now, and they'd probably say yes. Mariana Sanchez looks now at the lack of infrastructure that's leading to so much frustration.
Jefferson de Gliosporo is up at 5 a.m. and out the door at 6. Going to work every day is not easy. It's a long way to his workplace.
It's 2 or 2.5 hours if there's no traffic.
A 20-minute walk to take the first bus. There aren't many around, and he says each company charges what they want. Jefferson works at a sports club trying to make a living in this city of more than 10 million. Like for Jefferson, most people living in the outskirts of Rio de Janeiro are early risers.
We've been here 1 hour and 40 minutes and we're not even on the second bus yet. It's always like this. Imagine this trip standing up.
Passengers in Rio's suburbs, where most of the labor force lives, take at least 2 buses, some 3, and the subway or the train to get to work.
It's a pity these buses don't have FIFA standards. It would be beautiful, excellent. I think the buses would even have wings.
Traffic in Rio de Janeiro is unpredictable. People can spend between 4 to 7 hours in their daily commute. The system is not linked up because of a lack of urban planning and record car sales in recent years. An effect of the economic bonanza in Brazil is the fact that the middle class has grown, they have access to credit, and they're buying more cars, complicating traffic and even creating chaos. Experts say transport is one of the major problems of Brazil's largest cities.
Mass transport is not a priority. Statistics say only 25% of the people in Rio use public transportation. The rest is buses and cars. So we have a system that is congested, not interconnected, and does not allow for fast travel. That's why the passengers have to pay so much.
By the time Jefferson reached his workplace, 3.5 hours had gone by.
Despite having 5 stars in football, we don't have a single star in health, transportation, nor education. I hope that after the protests, something gets better.
But his day is not over yet. After an 8-hour workday, he goes to study to be a chemical technician. And only after that, he begins his long journey back home.
Finally this week, the internet, practically indispensable these days, but still beyond the reach of a lot of people. 3 billion, in fact, across places like Latin America, Africa, the Middle East. People who have poor or no broadband services. And so enter a new Google-backed venture which has launched a series of satellites to reach out to, as they call them, the other 3 billion. Will it really deliver, though? Tarek Basley explores that.
For almost 3 years, Zimbabwe's capital Harare's been linked by fibre optic cable through South Africa to the global internet. But demand for that bandwidth has outstripped supply, and that makes for slow and patchy internet surfing.
Yesterday when I came here, it was nice, like it was fast and efficient, but today it's kind of slow.
For Wi-Fi, I wanted to play YouTube videos. That's the sort of speed that I wanted to have.
Frustrating for customers, hard too for those trying to turn a profit, relying on ISPs or internet service providers that deliver less than they promise.
As you see, the clients are there, they are using internet, suddenly it drops down. And the ISP, they'll tell you, no, the problem sometimes you face, you have kind of the whole day without internet, and they'll tell you there's nothing they can do to their side.
Fibre optic cables form the basis of the globe's digital network. They're relatively easy and cheap to lay beneath the sea, but much harder and expensive to lay over land. This means landlocked or remote areas have often missed out on broadband internet. That's why satellites like this can help fill in the gaps. They're positioned in a way that allows them to target areas that have missed out on fibre. Remote areas like the Amazon basin, for example, or sparsely populated regions where communications are poor. The satellites are in a low orbit, which means data can travel faster up and down. And with large volumes possible, the whole thing can be done much cheaper than before. Internet connectivity may be a ticket to economic development, but the job of actually delivering faster and cheaper services will still fall to existing service providers.
Many of the cell operators, they are making large amounts of money, and the question is raised, are they really pushing their network out to people who could really benefit from it in the rural environment, or are they just really chasing the low-hanging fruit, as they say, the easy customers where they're going to make the most money?
Until its services are rolled out and their affordability is known, internet users will have to wait and hope that fast and cheap broadband will put an end to their frustratingly slow downloads.
Now, those low-orbit satellites you saw in Tarek's report, they're being put into space by a group called O3B Networks. O3B meaning, as we said before, the other 3 billion. Steve Collar is their CEO, and he's joining us from the European spaceport in Kourou in French Guyana. Steve, internet for 3 billion people is a big claim to make. Tell us how you're going to do it.
Yeah, so obviously we're going to be part of the solution, but a key part, because the challenge in getting these 3 billion connected is that they are not in places that are within easy reach of fibre. And so we're building a satellite network which is the equivalent of fibre. It's the reach of satellite, but the performance of fibre. And that's very, very important. Most of the world, as they become connected, will be wirelessly connected, and we can provide that essential infrastructure, the middle mile, into the wireless networks.
And how does all of this compare to the famous Google balloons that we saw launched a few weeks ago. Is it, is it the same sort of thing? How closely do you watch what they're doing, given they are also an investor with you?
So Google are a shareholder, an investor in O3B, and they're driving forward to try and develop access technologies, and that includes the balloon project that they're doing. It also includes O3B. The two may well end up being complementary to one another. The balloon project is very much about access, so it's that last mile, distributing directly to end users, to mobile devices and the like. We're providing the middle mile, we're providing the backhaul to make sure that there's enough capacity to fuel those networks.
Okay then, Steve, I want to get into some of the detail on this. You, as O3B, are providing the back end here. You're providing the raw product, I guess. But you're not an ISP, you're not an internet service provider, and therefore it is going to be up to others to distribute your product, as it were. Now, how do you keep an eye on that? How do you regulate it and make sure that those other 3 billion aren't going to get fleeced for their internet?
No, that's exactly right. So our customers are the ISPs, they are the telcos, the mobile operators who need the backhaul from those networks. And there's two sort of key innovations with O3B. One is about bringing the satellites closer to Earth, which is the only way that you can solve the latency problem, the delay that's normally associated with satellite. It's associated with this link that we have. With a phone call, you know when you're on a satellite link rather than a terrestrial link. So we solve that by bringing the satellites closer to Earth. But the other thing that you mentioned is also important. If you're providing broadband into the emerging markets, you need to do it at an affordable cost. And so we've also driven down the cost of satellite bandwidth, which has been one of the problems, one of the reasons that satellite is not well used for this kind of application for data and backhaul.
But the point being that the person at the end of the chain who pays for their internet access, is there a way to make sure that they don't get taken advantage of in all of this, and that they're actually going to get this high-end service that you say you're going to provide, and they won't be paying exorbitant amounts for it all?
Well, I mean, what will determine that is essentially market forces, and so we're bringing an additional solution to the other solutions that are out there. Fiber operators will also be in the market. Microwave is developing in terms of its technology. So we see all of these things working together to make sure that there's sufficient competition to drive down the price to a point that's acceptable and works for the end user. But certainly in terms of our price points, where we can get to, where we can deliver bandwidth, we can enable broadband, 3G, and even 4G LTE in the emerging markets at a price that's affordable.
Okay, short story on this one, Steve. Are you actually going to make any money from all of this? Because as noble as all your intentions are, you are a business. You need to make money. You need to finance the project ongoing. So therefore, you've probably got to pull in some pretty big customers at some point.
No, that's exactly right. And so this is absolutely a sustainable business as far as we're concerned. And I think some of the best innovations, some of the best ways that drive technology into the market are through, a sustainable business like O3B. So absolutely, we intend to be making money doing this, and at the same time, really spreading the growth of broadband into places that just aren't well connected today.
But do you still need to go back to my point, do you need to go after some bigger customers to actually make this work? Big businesses or corporations or even governments?
No, of course. And our customers will be those that are serving the other 3 billion. And they include the mobile operators, they include the telcos, they include the ISPs. And working with these customers, and many of those customers we have on board already. So we have about a third of our capacity already spoken to. We have about 20 customers around the world. They include some of the most remotest parts of the world. So one of our first customers was a telecommunications company in the Cook Islands in the middle of the Pacific, Telecom Cook Islands. And this is a great example of a place that's really been underserved with respect to its connectivity up till now. And as soon as we launch, we're going to be able to provide 300 megabits of connectivity directly into the Cook Islands. That's probably 5 or 6 times more than they've had in the past.
Well, good luck with it all, Steve. We will be watching closely. That is Steve Collar from O3B Networks there.
Thanks very much indeed.
And if you're one of the remaining 4 billion who do have a good internet connection, we'd love for you to visit aljazeera.com/business for the latest business headlines, plus all of our previous episodes for you to catch up on. You can also get in touch too. You can tweet me at Kamal AJE, our business editor at Abid Oliver Ali, or drop us an email. Counting the Cost at aljazeera.net is the address. That is it for this edition of Counting the Cost. I'm Kamal Santamaria. From the whole team, thanks for joining us. The news on Al Jazeera is next.